And everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just before 4 o'clock here on a Wednesday night, a big day, Wednesday night, best day since 2020, Wednesday night. Lots of things to cover. I got a couple text messages said, what in the world happened? What just happened across my Twitter feed on my direct messages. So let's talk about that. And I took this screenshot here real quick. You can see it on the left-hand side. These are the alerts coming over my phone, right? Best day since November for the Dow. Stock rose 3%. Let's see here, stocks May 2020 jumping 3%, 900 points. And you realize that a lot of you don't go up 900 points or have these big days on the NASDAQ like you're having unless you're in some kind of bearish market, right? Like these things don't happen in bull markets. So we're not out of the woods yet, but I want to tell you that I am real. Let me not just bury the lead and tell you I'm really bullish here. Let me tell you what I think is going to happen. I think Tesla has the potential to go to 1,000 here. If there's a stock that could do it, make that kind of move, it's Tesla in the short term. And I think SPX 35, what are we at? 4371. Got about 4350. We'll just do this, 4350, 4371. You realize we were just at 4100 the other day. So just on like Monday, I believe it was like 4,100, okay? So you're like, well, that's just 200 points. When you see like 900 points, you're like 200 points, 250 points, what's that? Well, 1 S&P point equals 8 Dow points. So there's a little bit higher weight ratio there. So in case you're not used to talking in S&Ps, but how do we get there and what happened? And is this the bottom you have to buy and all that other good stuff? We will talk about that here momentarily, and what does this all hinge on, so to speak. But very quickly, stock nerds and marketers, before we begin. Now listen, a lot of you are taking me up on the offer. You're asking for the screens I share, you're emailing, you're direct messaging me on Twitter. I appreciate that. But look, if you want to get a hold of anybody, and Don is not 100% cash anymore. He put money to work. You watched his video from last night. You can see what he put to work here. And then today he put more assets to work. And if you want to talk to him about that, you're like, hey man, I know you've been in cash. And now you're starting to put assets to work. What are you seeing? Look, what separates us from every other shop and from every strip mall advisor next to the vape shop is that we talk with you. Like there's no plausible deniability. We're not asset allocators, we're strategists. We execute on strategy. And so that's a huge difference. And we then make ourselves accessible to you. And so if you want to talk to like Hunter and Don, they do everything in the portfolios, what's on the watch list, what comes off the watch list, what gets bought, what gets sold, and all the who's, what's, when's, where's, and how's. Why's is what I wanted to say there. They answer to you for that. And they're more than willing to talk to you, especially if you want to do a Zoom or just have a quick chat on email or Twitter or by the phone. Here I am, right here. You can get a hold of me, TJ Reazor on Twitter, at tim@revereasset.com. And then listen, if you want to talk to America's fiduciary, right here, Danny Stewart, there is nobody better. Nobody more down to earth, sensible, and committed to making sure you get the best unbiased advice. We're not homers for stocks. If you've listened to any of our content, we're not homers for stocks. We sure as hell don't sell insurance products. Anyone who's telling you insurance is an investment, it's not. Annuities aren't an investment. They're all insurance products. We don't sell any of that stuff. And so if you want just legitimate advice, maybe a second opinion on something you've heard, you can always talk to Danny. Look, we don't advertise. Everything we do is word of mouth. So whether you come on board or not, we'd love it if everyone who listened did, but we're here our business model is absolutely telling you what we're doing, why we're doing it, how we're doing it, making video content around that, and then understanding that you're going to trust us whenever your life gets too busy, or maybe your parents or your brothers and your sisters' lives get too busy for us to help you out. And so we love that. That works for us, and that absolutely works for you. And if you want to get a hold of us, you're on a connected device, just hit that phone button right down there, and you can do just that. Here's my Twitter handle. If you want to get a hold of me, at TJ Reazor. Oh, got a message in here already. So at TJ Reazor is how you get a hold of me. And then I typically get back. I try to do it right away, but sometimes the messages bunch up and I just get busy doing some research. So bear with me there. And then real quick, I want to show you this guy. This John Ehrlichman, man. He's worth a follow. If you like Twitter, I know Twitter's in the news a lot, but look, I use Twitter as the ultimate filtering tool. I think it's a great research tool. you know, some of these stocks have just gotten, you know, really decimated, like Uber. But I mean, I know they have to spend a ton of money, but this is amazing, right? You know, that just in 2017, they did $34 million in Q1. In Q1 of 2022, they did over $2 billion of food deliveries. That's not the rides, it's food deliveries. That's amazing to me. And so, real fascinating, like just fact-based, interesting stuff like Starbucks here, 4 million per hour in 2022. That I find that this guy's feed is really good if you want to give him a follow. And then Stock Owners Market Lovers. Let's see here. These videos, they are for what? They, my friends, are for edification purposes only. They're never ever to be misconstrued as advice. If you want advice, need advice, seek advice, please, 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 all you have to do is, in fact, give us a call. So look at this huge move, right? 116 points in the S&P futures. NASDAQ's up more, but I need you to understand what happened and why it happened, okay? Because it's not just, and it's a big up day, and this is why you never sell, because you never hear, we're not homers for stocks like that. We're in 100% cash. Protecting your downside, but then when we see the opportunity and we see the pitch to which we want to swing at, you take the bat off the shoulders, and so we do just that. But what happened here? So here's the VIX. I think it's an easier story to tell through the VIX futures, because if you remember last week, if we go back to last week's episodes, bat friends, let's see here, go to tomorrow's insights, and I did a video that said, where is it right here? Big time sell signal has returned on Apple's earnings Eve. And that big time sell signal came through. It came through like a banshee on Friday, right? Last Friday, big down day. And the VIX futures inverted, right? And I explained, if you want to know why the VIX futures inverting on the 3 contracts to which I study, go back and watch that video. We never pull anything down. We sure as hell don't never edit them. But look, the VIX futures, they're not inverted right now. And so, well, that makes sense after today's, excuse me as I cough, after today's price action. But what really transpired, and it's so important to me that you understand this next facet, that you understand what transpired. So you, if you're on the wrong side of the trade, when you see this happening, you can then get yourself out of the wrong side of the trade, right? And it works both ways, both bullish and bearish. But look, this is what the VIX futures are doing, meandering. Here's 8:30. They trade all the time, right? But here's 8:45 shortly after the open, and they're just, you know, they're kind of being walked down sideways. The market at one point with NASDAQ was down at 1.1% for the day, and then it buoys back up to like almost up 1%, and then it kind of goes in. The NASDAQ and the SPs are going into the market. Excuse me, in the J Powell's Fed release rate announcement. And then, well, just do his rate announcement at 1300. Let me circle that time right here. They kind of go and flatten. Here's the VIX futures, and you can see you get this down move, right? We're on a 5-minute chart, and then this up move, and I want you to see what happens at 1330. That's when Jay Powell starts speaking. He speaks for 5 minutes, says a couple things, and then the market's like, oh, this isn't so bad. And what are the VIX? What does this actually represent? Not just the VIX futures going down, it represents hedges coming off. Now, some of you are like, no kidding, Tim, but you don't think of it like that. Is this the market you want to buy? Some of you are perplexed by what transpired. Like, I saw the GDP print last week. I know all the bad news, you know, right? Like, what changed? What changed in a day to give you best day since May of 2020? You know, like what changed economically? Nothing. And so the market doesn't move because it wants to. The market moves because it has to. And it's so imperative that you understand this. It's important to me that you understand this, because this took me forever to understand, and it still gets me, right? You know, like who's perfect in the market? Nobody. And so, but markets move not because they want to, but because they have to. And what you see here is Jay Powell saying, hey, we're no 75s, we're doing 50s. We're going to do 50s 3 times in a row. We think we can make a soft landing, and we're going to do our best not to hurt the consumer. Okay, so Jay Powell kind of rules out 75s, 75 basis point hikes, and says we're going to do 50s. We're going to beat this inflation thing, and we're going to do it while we're all going to give everybody a soft landing. Now, do I believe that? That's a whole different show. But what transpired here, right? Because all the things that I believe that you've heard me say on the podcast about demand destruction, et cetera, they're all still true. But what happened here is hedges. So you got to understand the big money, right, that uses the VIX futures to hedge. They're like, oh, wait a minute, this isn't because this announcement's a binary event. You don't know what Jay Powell's going to say at a live press conference because you don't know that. People put hedges on their large positions. And when they don't need those hedges anymore, what happens here? The VIX futures come down. So look at this time frame, 1300 to 1330. Now I'm going to put you at the S&P futures up here, okay? So now we're going to look at the S&P futures, right? Just kind of middling, 1300 to 1330. This is when Jay Powell releases the announcement. This is when Jay Powell speaks. Into the lows right here as Jay Powell's about to speak, and then boom. See, when you have puts on, right, or you have the VIX futures, right, on, and you buy them back, that by nature closing out your bearish positions, I'm trying to say this very clearly, closing out your bearish position by nature will lift up the S&Ps. So what changed today? Did Jay Powell say sunshine and lollipops? It's all great? Or did the market didn't want to move, it had to move because of the nature of all the negativity, all the puts, all the hedges that were on, and now you get this move that ignites this for the day, a one-day brilliant rally. And so yeah, that's what you get here. And so, well, how far now? So now that we understand that, and I hope I explained that in a way that you do understand that. A lot of you probably already knew that. Like, Tim, why are you wasting my time with this? But a lot of I know based on some of the text messages I got that isn't clear that that's what happened. But you don't look, you don't talk down. I mean, this is you can make money in this rally. You need to understand that. And so, like, let's take a look at S&P. So I said S&Ps to like 4350, 4371. So here's SPX. And so this is a 5-minute chart. Let's get this up on a daily chart. And so you're at the 21. That to me seems like a natural pausing point, but I've got a target up here where I have a white line drawn on my chart, and it just happens to be in the zone. Here's the 50-day. So if there's follow through to today's move, now there doesn't have to be. There doesn't have to be anything. But if there is going to be some follow through to today's move, you know, coming up here to this 4350, 4371 area, this zone up here near the 50-day makes sense to me. And oh, by the way, where does that take you back to? Well, Tim, let's take a look at that. Let's put this like on an hourly chart. Where does that take you back to? Yeah, that gets you right back here. Excuse me. Where here is last Friday. So we're at resistance of last Friday. It gets you back to 2 Fridays ago. That's all. Excuse me, 43.50. Pardon me. It gets you back here to 2 Fridays ago. I was just a little higher on my chart there. So it gets you to the underside of last Friday. Probably a big battle there. That's kind of what I think. And well, why would there be follow through? Why would it go? If you can clear this zone, so everybody who shorted here, right, and wrote it down and didn't cover, you're going to trip their stops. So you trip stops here. See that? I want to make sure that you understand what I'm saying. So the market went up today, right? Not because it wanted to, but because it had to. I'm going to keep saying that phrase. And so people who are trailing their stops, they cover their shorts here. Let's see, they cover their shorts here, right? If you get through this, they cover their shorts here, and maybe it gives you that little bit of last propulsion, which really is just 50 to 71 more points higher. It's not that huge of a move. And so this is a really big candle. If you can clear that, yeah, you're going up here to the hourly 200, up to 4,400 probably. So it's a bunch of things. It's hedges being covered and then stops getting tripped to the upside of people who shorted from earlier, not wanting to give up gains or wanting to minimize losses. And so it's like a helicopter. It's got multifaceted, right? It's in multiple dimensions where you've got your propulsion spinning above you, you've got your yaw, you've got your lift, all in a couple different axes spinning right above you. And so you've got multiple things to contend with here to help you kind of wrap your brain around what took place. Because what will happen is you'll harden in your position about the economics of the situation, and you'll miss some brilliant moves. So I don't know how long this goes to, but and you know, like they say, smoke them all you got them. And so that's what I'm looking for in the S&Ps. Now, let's cover Tesla, and then I'll show you what I think all this hinges on for reals. So Tesla. So let's go Tesla here. Tesla with just, I mean, Tesla had a good quarter, man. So like you can play the rebound on stuff like Amazon and Facebook, and you know they weren't the greatest of quarters, right? But Tesla had a good quarter. And so look at this here. You get the old patented white bar here on a 5-minute chart around 1330, 1340, and then it's just off to the races. And so, well, how far could this thing go? And so let's get this on we'll just walk the dog here on a 30-minute chart. So you cleared last Friday. Now I'm talking about these levels, right? And I'm going to do some different time frames here. So you cleared this last Friday's high, okay? That's you know, you cleared that today. Now where can we go to? God bless you. I don't know who still shorts Tesla other than Bill Gates, right? So if you can get, so you're at the 30-minute 200 here. Now you cleared this area right here. That's what we were just looking at. You cleared last Friday's area, okay? If you can get through the middle of this big down bar from last Tuesday, you're probably, I think the easy target's 970, but there's a chance that you get up to, you could come sniffing 1,000. And so I've got this on the hourly chart. If you can clear, get into the zone of this bar and clear 970, or I have it drawn on my chart, the 50% retracement. Let me just see if I can take this down to a daily and then zoom in a little bit. It might be easier to see my fib levels here. So from the high to the low, the 50% retracement is 987. And so if you're going to retrace right into the underside of that 50% retracement, meaning you're going to retrace up this level to the 50%, that's 987, that's 1,000, that's a zone, right? If you start sniffing that level, you can clear 970, you probably start making the move up to 987 to 1,000. And so maybe 1,000 becomes a magnet for Tesla. There's a stock that can do it in 2 days. It's certainly Tesla. Now, what does all this kind of hinge on? So let's go back to a 5-minute chart. And I hope you're finding this helpful, because these are the things I'm thinking about as I'm watching all of this develop. Okay, so here is DXY. So what does all this hinge on? It hinges on the dollar, right? And so when the dollar is going higher, and we'll show you that here in a minute, the market is struggling. It's gasping for air. It needs more oxygen. But look at this, the dollar here shoots up, and then in these 5-minute increments just releases its energy lower. The dollar comes off. That is brilliant for the bullishness of the market. You need the dollar to come off. But we should look at this in much bigger time frame. So let's look at this on the daily. So if the dollar, which is at 102.59, right, can come back to the 21, if the dollar can come back, I don't know if it can. We're going to look at this on the ATR chart here in a second. If the dollar can come back to the 21, that might be where the move in the indices pauses. I don't want to say ends, because it's a market, anything can happen, pauses and maybe it resumes its bearish trend lower as the dollar comes back to the mean and then potentially finds its footing onto, if it takes out these highs, I believe the trajectory is to like 108, 110. Now, where's the dollar on an ATR chart? Yeah, it's been trending up here at the third ATR. All it has to do is come back to this mean right down here, somewhere in that vicinity. It doesn't have to. If the dollar reasserts itself higher, you're going to see pressure on stocks. But in the vacuum of the world I'm doing this video in, you'd want to see the dollar pull back. That's where the market bullishness stops. And that could be like 5 to 6 trading sessions. It doesn't have to be tomorrow or the next day, just 5 or 6 trading sessions later. And then but watch the dollar. If the dollar does get back here to the mean, as long as the dollar is heading lower or trading sideways, stocks should be okay. And then the moment the dollar starts to reassert itself, whether it's at the mean or from higher, that's when stocks probably start to falter just a little bit more. So listen, that was a lot. If you have any questions on that, you know how to get a hold of me. TJ Reazor on Twitter. You can get a hold of any one of us on hit the phone button there. The phone button, by the way, connects you right to Danny. Like, so if you want to just hit the phone button, it's a hotline to this dude right there. So you can get a hold of us from multiple means. But very confusing day if you've been following the markets lately, and hopefully this helped to clear it up. So with that, oh, and by the way, we'll have the rest of this, so much more for you on this week's podcast, which we'll tape Friday morning. It'll be out Friday. You'll find it Friday afternoon, posted right to the website right here. And then Saturday morning, it gets sent out via email to our subscribers. And you can just subscribe right there at the top of our page. And then, of course, it's updated on the Apple, iTunes, Google Play Store. With that, I hope you have a great night. I will see you at the next update.